questions. Today, we will demystify how traders can prepare for black swan events.
The market is a game of delicate balance. Traders have to build positions, manage risks, and always strive for a steady upward trajectory. But sometimes a sudden unexpected disruption can overturn the whole game. Such events are called black swans.
So there's a book by Nassim Taleb in which he says that by the outset you cannot predict that a black swan is going to come. In fact, they say that there are 12 recession outcomes every year, but hardly any materialize.
It takes only one shock to show how devastating a black swan event can be. In 2008, we got a stark example of this. The subprime crisis came seemingly out of nowhere. From mid-January 2008 to mid-September 2008, Nifty lost 35% of value. Lehman Brothers filed for bankruptcy on September 15, 2008, and Nifty lost another 25% in the next 3 months to 3,000 level by the year end. Investors lost fortunes, and retail investors faced the hard brunt as the Indian markets lost 50% of market capitalization in a single year. The 2020 COVID-19 pandemic presented another black swan event. On 28 February, Sensex crashed 1,194 points in early trade. But this time, Indian traders were better prepared.
So traders were able to manage the 2020 COVID crash. Traders were aware that you need to manage your overnight risk, but I made a rule that no matter if I'm carrying any overnight trade, I'll hedge the trade. So if I had naked futures, I would have lost 3.5 lakhs on a single lot. But due to my hedge, my loss on this trade was only 20,000.
The lesson? Black swan events can't be predicted. But with planning, you can cap your losses.
So one key lesson which I have learned is no matter how sure you are about the markets, every trade should be hedged overnight. And in case of any major correction, you should not lose more than 5%. And the way to do that is, suppose you are long in any instrument, you buy a protective put, which means you are buying a put certain percentage away from the current market price, so that even in case of any correction, your losses are capped and you're not losing more than 5% of your trading capital.
So the market may throw curveballs, but with the right risk management, you can endure these unforeseeable events.